Hi again everyone, hope you're all doing really well. This video is a short but more technical follow-up to the video I made the other day regarding Bed Bath Beyond stock, ticker symbol BBBY or triple BY. In that previous video I talked about how Bed Bath & Beyond may perhaps be the next meme stock that could garner widespread support. The basic premise was that the involvement of Ryan Cohen with another mounting short situation could give the stock a bit of a GameStop style pop. And despite the stock largely being in decline since Monday's monster rally, what I am here to tell you is that the short squeeze play is in fact still on. Also, I want to look at an interesting perspective that I read in an article regarding GameStop Chairman Ryan Cohen's intentions for Bed Bath & Beyond and what it could mean for the company. There's a little bit to look at, so let's get straight into it. Firstly, taking a look at some of the key shorts data heading into Monday, in comparison to when I first covered the stock on Wednesday, we can see that there has been some mixed results with the stock price dropping as well as the borrow fee. However, significant improvements were seen in the percentage of float shorted, jumping up to 32.07% from just under 26% last Wednesday. The average days to cover has also cut in half. Consequently, there has also been a significant jump in the overall short squeeze potential ranking, with the stock moving from 152nd to 88th on Fintel. It is worth noting that it was actually ranked outside the top 200 before last Monday's rally. So I think while the market continues to sag due to the international mess we are watching unfold, Bed Bath & Beyond has continued to make progress in its short squeeze potential. Perhaps of most note, the average days to cover has come down, so a strong showing for the stock on Monday and Tuesday could see what ignites a bit of a short squeeze rally with Bed Bath & Beyond stock, particularly if it does drive up the borrow fee. The only metric still causing me some concerns over the short squeeze potential with this one. Now, diving into a daily chart, we can see that since this huge candlestick from Monday's rally, there has been a slowing in the volume of the stock traded and at least a downward trend in the stock price. A technically logical move, as the RSI has been around the upper limit for the whole week, and the Bollinger Bands have basically been blown apart due to Monday's rally. While this may look like a slow churning out of players of the short squeeze on the surface, it's actually not. Enter the red rectangle of distressed short positions. As we can see that basically anyone who has taken out a short position this year prior to last week is now in a position of distress. Given how low the borrow fee has been, we are potentially even seeing some longer held short positions trapped over here from as far back as October 2021. I think provided the stock can stay above the $17 mark, as the days to cover in the shorts continues to tick down, then we could be in for some fireworks later this week. I like the $17 mark because it basically represents the high that had been previously set in the stock earlier this year. So just an important price point to watch out for. And when we move to an hourly chart and look at the past week, by and large, it would seem that many retail traders are digging their feet in with this one, as the stock price has traded rather steadily at balanced volume levels following Monday's rally. And this has been in the face of all of this week's negative market sentiment. To put in perspective, the S&P 500 had 3 down days in the past 5 work days and finished the week almost 5% down. So while we do appear to see a slight downward trend in the stock at the moment, I wouldn't be too alarmed about any of this. Now, moving on to one last thing I wanted to address in this video, that is that there was this particularly interesting but at the same time negative piece that was written by Dana Blankenhorn in Investor Place over the weekend. I will link the article in the video description. However, the gist of the piece is the author thinks Ryan Cohen is not going to bring much value for Bed Bath Beyond long-term stockholders. He is basically expecting a similar situation to what was seen with GameStop. A play to cut and sell assets to make quick money and not necessarily turn the business back to profitability, but hopefully send the stock price skyrocketing. The article also comments that the timing is not ideal for such a move, as retail assets are quite depressed at present, so it's not a good time to be trying to sell them off. It is an interesting perspective the author makes. I suppose it gives you some perspective on what the reality of the potential play could be. We could be in for a major GameStop style rally. However, longer term, it could be problematic for the company if Ryan Cohen and his series of demands of corporate action from the Bed Bath & Beyond board are indeed met. The author seems to think that the current actions of the triple BY board are indeed steering the company in a better longer term direction. So if Cohen is able to take power and execute on some of his plans for the company, then perhaps this is not a good thing longer term for the company, but it could add further firepower to any Bed Bath Beyond stock price rally that we see in the short term. So I suppose these are some developments to be keeping an eye out for going forward. So to close off, the short squeeze play is seemingly ticking down to take off as the days to cover positions continues to decrease. I'm hoping to see the stock maintain its elevated stock price to prevent a meaningful number of the outstanding short positions covering. However, in the meantime, I would very much like to see some decent growth in the borrow fee to place further pressure on stocks to cover and really give the short squeeze play some firepower. In terms of what role Ryan Cohen will play in the company going forward, it will be interesting to see if he is able to get board power and execute on some of his ideas, which if executed on now could resemble a bit of a fire sale, which will give the stock some further catalyst to drive a short-term rally, but could be damaging to the business longer term. It's an interesting space to watch. Anyway, that's about it for this one. I'm expecting something to happen with the stock this week. Whether it is another upward drive or a fizzling out remains to be seen. It's a risk versus reward at its finest. What are your thoughts on the whole Bed Bath & Beyond saga? Are we set to see a GME style rally, or is this just another of the minor meme stocks that is rotating through to be this week's retail popular pick? Let me know your thoughts in the comments below. Also, if there's another stock you would like me to take a look at, drop the ticker symbol in the comments below and I'll see what I can do. Until next time everyone, may the markets trade in your favour. Cheers.